Johnny's muted. Morning, Guy. Good to see you.
Hello, Martin. How's it, man? Nice to see you.
Okay, so my institutional trader.
Good morning.
So this is
Morning.
a high level. Brew,
Yeah.
I don't know why my fucking earphones aren't working. Just let me close my. Okay, so I'm looking at the month chart here. So everybody's talking about the RSI and blah blah blah. I'm not interested in that being over 90. What I am looking at is this overextension on the monthly chart.
Are you
This
going to share your screen?
maybe,
Okay.
if you ask nicely.
Do it now, boy.
Jeez, okay, sorry, man. Okay, cool. So this is what the story is. This overextension here,
Mm-hmm.
it's not normal. This is not normal, dude. Like I know that we've been talking. I know we've been
disagree.
talking about 4,200, 4,500 for almost 2 years.
Yeah.
But this
I,
extension,
I disagree, Al. And the reason I disagree is that, in any cyclical movement where paradigms are broken, patterns are broken, you need to have an impulsive move to break that paradigm, to shift it into a new realm, like Bitcoin, for example. You can't tell me Bitcoin's run's been normal. You know what I'm saying? So, macro fundamentals are driving this
but
thing.
you can't
Yeah.
look at Bitcoin. Bitcoin has always been run off fear and greed, and the collapse of the banks and this hocus pocus.
No, Bitcoin's been money in, money out, Al. Capitalization. Okay, look at what happened on when China imposed those things on Friday. Bitcoin dropped with that huge wick at the bottom. Money in, money out. Same thing with gold. Money in, money out. Institutional investment, institutional disinvestment.
But this is inefficient.
No, this is very efficient. If you look at pricing, no, it's inefficient. You're right. It's inefficient. If you look at pricing and what it's leaving behind, it is. But any impulsive move is inefficient, and any corrective move is efficient.
That's what I'm
Okay.
saying, is that this is
Yeah.
so inefficient that there has to be a correction.
No, there will be.
Okay,
But
so this is my concern. This is what I want to talk about. Yes, we could go to 4,500. Okay, we could go to 5,000, 100%. But the question is this a time to be a risk on?
absolutely not.
So
There's no way.
I'm thinking, if we look back in history, why can't I scroll? So if you go back in time, I can do it this way. If you go back in time, we can see that there is a corrections difference between October and February. So let's just look at the months here. Let's include the months maybe. Okay. So look here. This is December, October to February. Okay. Here's October again. I'm not sure. Okay, so that's 2004. We saw that in last year. Okay, there was a massive correction. Here it is. Okay, again. And now we're in 2005, October, and I'm thinking that the price is going to plummet fast.
Well,
Back to the 3,550 zone. Why?
Why?
Okay, my thinking is, one, the government shut down. Everybody's flying blindly.
Well, government shutdown now is pushing gold higher, correct?
Exactly. And then when they come back online, which is in a few days, weeks, whatever it is, they're coming back online. Okay, Trump is going to call it and he's going to say, Or the Dems they're going to have to fold, okay, because they're not getting paid, so they're gonna fold. They don't have a trump card.
Okay. Yeah.
So what's their trump card?
Yeah.
None. Okay. They don't have one. Okay, there's nothing that they can pull. So I'm thinking that the price, when they come back online and COT comes out, and I think that the banks have had their fun, which is now, I think the price is going to plummet. And I think it's going to go down to, not fast, but by February, I think we're going to be at the 35.50 zone. And then it will recover, not to an all-time high, but stabilize. Will stabilize up here. And then later in the year, July, August, we'll probably push higher to all-time highs, or maybe in a year or two.
Okay.
I just want to get feedback from you as the institutional trader and mentor of what your theories are.
For me, we're in an unprecedented market. Really, we are. Government shutdown. This hasn't happened in many years. Number one. Number two, you've got Powell that came out yesterday saying that Labour statistics are really starting to take a lot of strain, and it looks like there are going to be additional rate cuts coming through. Which we know, okay, but Powell's saying that and reinforcing that, so we've got to watch the Fed watch tool and have a look at the percentages there and see what type of rate cut we're looking at. So we know that another one's going to come. And is there going to be another one this year? Is there going to be another 2 cuts this year?
So you think gold is going to rocket north when that happens?
Well, a lot of it's been priced in, sure, but because of the shutdown and this whole China thing, it's risk off right now. So when things are risk off, at the moment, gold flies, right? Because all the money comes into the safe havens. So at the end of the day, we've got to keep our sort of ear to the ground. So I don't think this moves over until, like you say, there's some sort of resolution, okay, and some sort of reason why money needs to flow out of gold. Gold's going to keep pumping. It's as simple as that. And we can speculate to how much we think it's going to go to and when it's going to come back. We do not know. Right now, it's all-time high. It's unprecedented. There's no ranges. There's only supports. There's no resistances. And it's a blank screen. Okay, it's an open market to move as high as they want it to move. We don't have COT data. We don't know how much profit they've taken on their longs. We don't know if they've added to their longs. We know nothing. We're flying blind.
Exactly.
So until I see
here's another
fundamental shift, which is our only beacon right now, okay, to determine inflow or outflow of money, institutional money, okay, this thing could keep pushing up to 4,300 to 4,500 because we just don't know. Okay, and yeah.
So let's talk about COT. So the 13-week average, 100% going to be smashed.
Yeah.
Okay, smashed. And probable all-time high gold holdings smashed. That is another reason for them to bring it back in line. I'm not saying a full retrace, but I'm definitely saying back to normal levels or
What's normal?
I do hear what you're saying. Okay. But let's look at the chart more efficiently and like a wider view. Okay. So maybe 4,046.
We've got to look at structure.
Well, that's what I'm looking at.
All right. So the first structure on the weekly starts at 3.5 and comes down
Yeah, exactly.
to 3.2. Okay. So the first structure on the daily, okay, you've
No,
got
I
small
don't know
little
if this is
structures
a
all the way
structure in
down. You've
25.
got four.
I don't like it here. I agree with the three. I agree with the 3, 4,
No, I like
6.
it. Yeah. You like that structure further down. You like that structure further down.
100%.
That entire consolidation there is structure. The price
So
would
that's
come
what
down
I'm
to
saying.
that.
That's why
So
I'm
what is
saying.
that? That's
Okay,
that's
it's like if it.
my chart's saying 3.
I'm not on daily. I'm on weekly.
Okay, so that's
So let me go to daily.
Okay, so that's the structure. If they
Yeah, 100%. Which is okay. So that's the 50 moving average on a day chart. That is a massive drop, dude. I have an obligation. I have an obligation to my traders.
Yeah.
Okay. That is 530. That's 5,394 pips, bud.
Yeah, but it's not going to just plummet.
I understand
it's
that.
not going to just
Okay.
plummet down.
But if
there.
oaks are long, right at the top, that is a challenge.
Yeah, but let's stop there. Yeah, but let's stop there.
Yeah.
We're at all-time highs. It's risk off. Okay, your bot should either be off
minimal risk.
I agree.
or at minimal risk.
I agree.
Okay, full stop.
And at the end
Okay.
of the day,
And at the end of the day, you should be maybe using your strategy where of the 15 minute, it crosses the, when we go bullish on the 15 minute, it switches back on, and that setting that you've got. Are you still going? I don't want to digress on settings. Okay. So it should be, bottom line, it should be a very, very low risk out. Okay, because we have no ranges to go on. We have no targets to aim for. The only targets we can aim for right now are
Which is at what
Fibonacci
level,
extension levels.
it all depends on where you've taken.
It all depends on where you've taken
Okay, so
your
just
levels.
help
I mean, if you,
because I'm not proficient in I'm not proficient here.
So you've got a go to the daily.
So you've got a go to the daily.
It all depends.
You got to look at it all
Yeah,
depends
no,
on the
I'm
strategy.
not-
A
it's a
lot
new
of folks are
strategy.
using Elliott
I
waves
don't-
at the moment because
Elliott
Elliott
waves works with
Elliott waves works with impulse correction, and you use fib extensions for the impulse leg that we're in. So what you do is you start off.
How do I do that?
Just make that bigger.
clicking the little two
Okay,
arrows
that
on the
daily
bottom right near the
screen.
time.
By clicking the little two arrows on the bottom right near the time.
Expanding arrows.
Time bottom right, 08, 12, 58,
right-
UTC plus 2, and then you got two arrows, expanding arrows. Right at the bottom right.
What?
The time on your
Up,
chart.
up. No, you see where the time is?
Up.
The time on your chart.
Okay,
Bottom
right.
dot your screen, Al. Sort of a
In
bit
that
in.
bar underneath.
This.
Right, up,
Right.
slowly. No. Slowly, okay, right.
In that
Oh,
bar
okay,
underneath
cool.
where you are now.
There.
No,
one
down.
bar
Got it. Thank you.
Down,
So
down,
I'm
now,
thinking, okay.
right, there.
Yeah, so
There,
it's
there.
4,600.
Okay.
4,400,
All right.
4,600. Those are the extensions. So if we exit, so you can't.
No, you got to use, what are you using there?
It-
You're using a retracement.
No, I'm using extension.
Using fib extension. You got to use that. No, you got to use, what are you using there? You're using a retracement tool. You got to,
You're using it wrong way.
are using fib extension, okay. You got to use that.
Yes, please.
Okay. Just delete that.
Bottom of the screen, there's a square
No,
with,
you're
a,
using
with
it
an
wrong
up
way.
arrow.
Delete
Okay,
it.
cool.
Can I share my screen? Okay.
Okay, cool.
Let me share my screen. How do I do that?
Yeah, you need to just enlarge a bit, I think.
Okay, got you.
Okay,
I got
so
it.
I'm here,
Okay.
but this is
And,
the issue,
Okay,
right?
there, share.
It's such a huge
Okay.
move, okay?
Huge.
Can you see my screen?
It's hard for me to enlarge my screen.
Yeah.
Okay, so I'm
So-
here.
so
But this is
I've
my
got
this is
monthly
the issue, right?
extensions, I've got weekly
It's
extensions.
such a
Let's
huge
go
move.
to
Okay.
The weekly
It's
extension, which
it's
is
it's
this
it's
extension
hard
here.
for me to enlarge
that's a
my screen,
1,
okay?
2,
So,
and then the 3.
so I've got
Three is
monthly
normally the
extensions,
impulsive,
I've got weekly
leg of an
extensions, but
Elliott
let's just
wave,
go
and it
to
moved
the
to
weekly
an
extension, which is
extension of
this extension here.
0.618.
Okay, that's a 1, 2, so, and then the 3. The 3 is normally the impulsive leg of an Elliott wave, and it moved to an extension of the 0.618. 1618, 2618, 3618, 4618, 5618, okay, which is the fib extension. 618 or so you'll see here from the way you work this extension, okay, is you go, you start off at the bottom of your range and you move to the top of
168.
wave 1. You extend it down to wave 2 and then it throws out the extension above. Now, if this is wave 3 here, okay, wave 3, okay, was 3168, okay, and 3.86, okay, it's always in that zone for wave 3, okay. Not much of a wave 4. Wave 4 retraces pretty much 23 to 38%, okay, of this impulsive leg. It didn't do that, okay. So my question mark is this the wave 3?
Is down to 3700.
Okay, is this the wave 3?
Okay, I
if
see
it's
where
not,
you are.
it's moved past 4618 and it's moving towards 5618. So
Yeah.
56.
So draw a wave down now.
Hang on, 5618 is that 4,300? Okay, can you see that? Okay. All right, so
Wave 3, yeah.
Okay, so now, okay, what happens is if this indeed, if I had to move this and make this the leg 3, okay,
yeah.
all right, what happens is we normally see a 23 to 38% retracement on the leg 4, okay? I'm talking typically, okay? All right, so my retracement is then from the leg 2, the impulsive leg, to the 5.16, okay? So then it could retrace to either.
Okay, so I think that's going to happen before February.
And let's look at this. Yeah, and if you look at where the 38.2 is, it's right within that structure that we're speaking about. That's $1,000 move.
I know. But as you go, as the price increases,
let's look at this. Okay, let's look at this because look at this.
$1,000 move. It's still within the range. As the price goes up, the percentage stays, but the value of the move is larger.
Yeah. So what happens with a wave 4, Al? A wave 4 is not an impulsive move.
It's a corrective move. It's an efficient move.
It's an efficient move. Can you see how inefficient this is?
100%.
Yeah. So what happens with a wave 4, Al? A wave 4 is not an impulsive move. It's efficient. It's correct. It's an efficient move. Can you see how inefficient this is, leaving gaps all over?
Speculative.
Look at this
100%.
move here. It's completely efficient. There's nothing. Okay, look at this wave 2 here, which is the corrective move. It's completely efficient. Okay. If this indeed, okay, and this is all subjective right now. It's subjective, right? If this indeed is correct in what we're analyzing here, and this is the wave 3, okay, then what happens is this move down here, we have to expect to be corrective and long. Efficient moves are long, okay? So this could take, this is an A, B, C move, okay? And this move, this wave 4, could come down $1,000, but it could take 6 months. Longer than your wave 2. Could take 8 months, could take 10 months. Wave 4s are very corrective and very, very long. Okay. And they're normally longer.
While you're drawing, would you agree with me that because the move up is so
your wave 2 here,
huge and so violent,
that's a price I need a date.
There could be a
date range, but
38% violent retrace.
October. No. Not if it's corrective. Okay, so let me expand on that. Okay, it could be a, I don't want to get too deep into it, but it could be a 5-3-5 move, which is a corrective move. No, not if it's corrective.
Yes. To answer your question, it could be violent.
Okay, so let me
this
expand
could be
on
a
that.
violent move,
Okay,
corrective
it
backup,
could be
violent
a, I don't want to get too deep into it,
is
but
an
it could be a
ABC.
5-3-5 move, which is a
And
corrective
when I say
move.
violent move, I'm not
Okay,
saying
yes.
one
To
move
answer your
down.
question, it could be violent.
38.
So this could be a violent move, corrective backup,
No, I agree
violent
with you. I
move
think
down,
it's going
Okay.
to be
which is an ABC.
Move down.
Okay. And when I say violent move, I'm not saying one move
Yeah.
down.
Which is a
To 38
moves 4 to
No.
complete the wave 4.
Okay.
Okay.
Okay. It could be
So
a
if I
violent
do
move
five,
down,
Is
correction
this
backup,
impulsing retracement
violent
legs
move
within
down
the-
to structure.
within
Okay. Which is
A
a corrective move
and
4
C.
to complete the
There's
wave
impulsive
4.
legs in there
Okay.
on the way down. Okay, but
Okay.
remember within the
So a
larger
5-3-5
picture,
is there's impulsing
it's
retracement legs
corrective
within
move
these,
the larger
within
picture. And
A
the market is
and
is
C.
fractured.
There's impulsive legs in there.
Okay, it's
on the way
impulsive
down.
corrections within
Okay, but
impulsive
remember within the larger
impulsive
picture,
corrections. I don't want to
it's
get too technical.
a retrace,
Okay,
a
because it can get
corrective move
confusing.
within the larger picture.
But
And because the
this
market is
basically-
it's
that's
fractured, it's
why
fractals.
I can't.
Okay, it's impulse and corrections
say
within
how far
impulses
this
and
thing
corrections
is.
within
Maybe a
impulses and
6-1,
corrections. I don't want to get too
2-4-7.
technical. Okay, because it can get confusing.
Okay.
But
And
this
well,
is
we've been talking.
basically that's
You and I
why
have been talking
can't-
$5,000 for 2 years.
you can't say how far this thing is. This thing could go to 6-6-1-8,
So-
which is at
so we're
4-7.
blind. There's nothing. At
Okay,
all.
so
Okay.
let's go back to
And
what we
until
do.
we
Though,
see-
okay, kind of. Okay, so this is what
Yes.
my theory
Yes.
is and my thinking. I
So-
just want to
so we're
get your
flying
opinion on
blind.
it.
There's nothing.
When they come
at our
back
disposal.
online and COT is announced, okay, and we're above the 13-week average, do you agree with me that usually if we're above the 13-week average, they bring it down below the 13-week average to keep it more efficient?
Well, price has to tell you that. Well, I don't know how to answer that. I don't know what you're asking me. What are you asking me? They
So
bring
if
what
the
long down.
13-week average
Oh,
now,
price
if
has
the
to tell you
number,
that.
the print
Well, I don't know how
is,
to
let's
answer
say,
that.
20%
I don't know
more
what you're asking me. What
than the
are you
13-week
asking me? They
average.
bring what the longs
They
down.
bring it down.
Exactly.
So, but price has to show you that they're bringing it down.
Mm-hmm.
No, I understand that. So they'll,
Um,
well, I don't know if price has to show you. I'm looking at manipulation. I'm looking at what the institutions
Yeah, they will bring it
do.
down to
I'm
that.
looking
So,
at
but price has to show
um,
you that they're bringing it down
Think
to
about
that.
it logically.
if there are no sellers.
But think about it logically. They're either going to keep their longs and increase their shorts. Okay, up in this move here, increase their shorts. So
Think
that
about
when
it
they do
logically.
bring everything down. Okay, they take profit on their shorts.
But
and
think
they
about
hold
it
on to
logically.
their
They're either going to keep their longs and increase their shorts.
because the long term
Okay,
is still for
up
5,000.
in this move here.
They'll have
Increase
to.
the
They'll
shorts
have to
so that when
remove
they
their
do bring
longs,
everything
some
down,
of their
okay,
longs,
they take profit on
and
their
I
shorts and
think
they hold
it'll
on to their
be
longs.
they'll bring the longs down to below the
Because the
13-week
long
average
term is
to
still for
drop the price.
5,000.
But they'll also
don't wanna-
add shorts at that point. Then when they get to the level of where your wave 4 is, they'll then take profit on the shorts. That'll increase. That'll make it more inefficient again. The price will spike up because their shorts, their longs are more than their shorts. They've removed their shorts. They'll probably add longs at wave 4, shooting it north, and they'll use CPI as...
Wave 4 is a reaccumulation.
100%.
That's what wave 4 is. So
But I think that's going to happen after Feb. I'm thinking that this 3 to 4
Wave
is
4
from
is
now
a
until Feb.
reaccumulation.
That's-
Okay.
You see, the
That's what
problem
wave
is, the
4 is.
problem
It's a
that's stopping me is this rate reduction.
if
So
they
like
cut
we
more
in a situation, it's
That's-
unprecedented,
that's
never
the,
happened before.
That's back to-
Like they've really like done a
everything we're discussing today is
Yeah.
100% subjective.
If they cut more than
yeah.
we're going through scenarios that we think might happen.
100%.
We don't, until
But my job,
Everything
the
we're discussing
responsible
today
thing,
is
I've got people that are on
100%
the group here, but
subjective and
I need to
speculative.
be,
We're
I
going
need to
through
be wiser.
scenarios that we think might
you can
happen.
only be wise enough
We don't
to
until
you are right so often when you've got ranges on the left.
Yeah.
Okay?
Yeah, I understand that,
When
but
you've got
Al,
stuff to go by,
but
yeah.
you can only be
Okay, when
wise
you're
enough
coming
to.
down here,
We're at
you've
all-time
got stuff on the
highs.
left.
Sure.
You are right.
Sure. We've got
so
nothing.
often when
How
you've
can
got
you be wise here?
ranges on the
You've
left.
got nothing
So
to
then the
work
only
Okay.
thing to say is to
When
be
you've got
risk
stuff
off,
to
and
go
this is
by
not the
here.
time to be
Okay, when it's
FOMOing
coming
into
down
gold.
here, you got stuff on the left here that you can supports and resistances.
for fucking months.
How can you
Yeah.
be wise here? What have you got? Nothing to work
our
off.
mantra. Okay, and we said it over
Correct.
and over in the community.
No.
All-time highs.
And you should have been doing that
Sitting on the bottom.
The
for
ATH.
freaking
Yeah.
months
Yeah.
already. As soon as
You
that
know what
was
I'm saying?
always
For exactly
our
this.
mantra.
Let the bot do it.
Okay, and we said it
Minimize
over and
your risk.
over in the
My risk is
community.
completely-
All-time
In
highs.
fact,
Why
right
do you
now,
think
my
we
bot's
added the sitting on
as
the
soon as I
bot
see a
for all-time
retracement down, I
highs?
switch my bot back on again.
You know what I'm saying? For exactly this. By all means, let the bot do its work,
But the
but
point I'm trying to
minimize
make
your
is
risk.
you've
My
got
risk is
no
completely.
references.
In fact, right now, my bot's off.
Okay.
As soon as I see a retracement down, I switch my bot back on again.
No cut data. No freaking NFP coming out.
That's just me.
Okay.
But the point I'm trying to make is you got
This is
no
such a
reference.
playground for
to go off.
manipulation. That's why I'm
Okay,
thinking that
you've
when
got
it
a
does come
shutdown,
back
you've got
online,
no data,
there's
you've got
going to
no
be a
cut
massive
data, you've got no
retrace.
freaking
When's the
NFP
next
coming out.
announcement? 25th.
Okay.
Yeah. So you could be right, Al, because it's unprecedented. So it doesn't
Yes.
follow conventional sort of thinking and approach. You
There's
know what
no
I'm saying?
TA to go by here. The only
It's not.
TA you can use is a fib extension. It's
Yeah.
the only TA
So
you can
you
use.
could be right,
Fib
Al,
extension
because
and a
it's
retracement.
unprecedented.
Yeah,
So it doesn't
retracement
follow
is right.
I
conventional
agree with
sort
you.
of thinking and approach. You know what I'm
How
saying?
can I draw a retracement?
What is that
But we got
retracement back to that level? What are we on here? A day chart? A week chart?
fib
Oh my
extension
God.
and a
That
retracement.
is?
Yeah, a retracement of
If I
what?
had to do a retracement here,
Yes,
like
it's 3,000 pips.
How can I draw a retracement
No,
on
I
this
mean,
chart?
how do I know this is the high? It could go,
So if I had to go to the,
I
I mean,
I
if I
honestly
had to do a
think
retracement here like that,
4,200 is going to be
you know,
a
I mean,
solid wall.
how do I know this is the high? It could go, yeah.
Well, it's another
So
psychological.
you,
I think it's a massive psychological level.
We thought 4,000 was going to be. We thought 4,000.
How's it, Inga? Hello,
well, it's
darling.
another psychological level.
Lekker, lekker. Have a good day.
We thought 4,000 was going to be. Sorry guys. We thought 4,000. I'm on camp.
You know what I'm saying?
Else is us.
The only thing is extensions for me.
We thought
That's what I'm saying. The
4,000
only
was
thing
going
that
to
we
be a
can use
massive
is
psychological
fib extension,
wall,
and we
it
can
just
speculate
burst through that like it
on
wasn't even there.
the Elliott wave.
You know what I'm
And
saying?
that's all that we can do. So
But
my
the
advice,
only thing is
not
fib
even. I
extension
think the
for me.
obvious thing to say, it's not even advice. It's obvious. You guys need to tone it down.
That if anything's come out of this little Google Meet, risk off.
If anybody else,
Off or minimal risk. Anybody else has anything else? To
Oh.
add? I mean,
Yeah. Anybody want to say anything?
that if
No structure on the
anything's
list to go
come
by
out of this little
technically,
Google Meet,
and no
is that
news.
risk
I
off,
just need to open it.
risk
I
off,
can't
bot
see what
off,
else.
or minimal risk. Anybody else has anything else to add? I mean, I'd love to hear from.
There is no fundamental. Oh, fundamentals, right? Yeah. Well, that's on the 25th, and I'm saying that the 4,200 level. This is what I think the institutions will do. I think they're going to
That's
run
tough.
out of steam. Because you must remember, this is not a contract; it's a CFD. It's speculative. We're not buying physical gold here. Okay, it's a contract for difference.
Yeah.
So I'm thinking 4,200, and then retracement down to a. Let me just open my phone here.
Trading the price. Yeah, it's very good.
39.57. This whole area here. I'm not sharing.
I'm going to stop sharing. Yeah.
Oh, okay, cool.
We've seen it.
Okay, cool. Here, 37.65. And then I'm saying by Feb 30. Well, we'll have to wait and see what the Fed does. But there's definitely going to be a retracement before the next announcement to then push it north.
We need more structure.
So I think that they're gonna liquidate shorts or longs rather, not the banks. They're gonna liquidate. So it will hit stop losses. So it'll be the shorting of gold by retail.
We need more structure.
So they'll have to create a liquidity sweep. I think 4,200, 4,220 will be your liquidity sweep, and then a deep retrace until the 25th for the next announcement, which they'll reduce the rates, and then all-time high, and then they'll do another liquidity sweep, maybe at 43, 4,400, down to the maybe 4,200 level. Wait for the next announcement, which will be on the 25th of November. And then it'll shoot north, and then we'll have a retrace back to, I think, possible 600 levels until Feb. It's too heated. This is a bubble, bro. I understand that there's demand. I understand that the banks are buying gold. Okay, the institutions are buying gold. We had another huge hit on gold, massive 12,000 tons or whatever it was. But that's physical. This is like it's a CFD. It's a bet.
Yeah, but it's a CFD. It's a bet of. But it still works off fundamentals. It still works off foundation. It still works off some sort of, fundamentals, technical analysis. It can be. It's an instrument that you. But it's bet. It's a CFD. It's a bet off something. But it still works off fundamentals. It still works off foundation. It still works off some sort of. Fundamentals, technical analysis.
Has America been
it's an
loading?
Instrument that you're trading. Yes, I understand you're trading the price of something. But when people are physically buying gold, have you seen the stats of the reserve banks buying gold at the moment?
Brazil's loaded.
I'll put it on the group. Okay, it's frightening.
All right. Well, thanks for your time. I appreciate it. You guys need to be risk off. Anybody got anything to add? Anybody want to say anything? You can unmute yourselves.
Anybody else using a different strategy that could shed some light?
Come, guys, it's open.
Nothing's wrong here. We're just having a lack of discussion among friends. Yeah. Anybody else using a different strategy that could shed some light?
All right, cool. Tola,
nothing's right.
Come,
nothing's
unmute
wrong
yourself.
Here.
What have you got to say? You're very
among
technical.
Friends and colleagues.
Like I said, you say CFDs is a speculative instrument, but I mean that follows the
real price.
The real price. I mean that's like I said, you say CFDs is a speculative instrument, but I mean that follows
exactly what I said, which is fundamentals.
The real price. I mean that's what it is. It's so what is happening in the real gold market or the CFDs is just a reflection of what is happening in the real gold.
Yes, there's some exactly what I said, which is based on fundamentals.
Currently, because I mean currently what have we got? We've got the China US trade war that's going on, and this that side and so on, and yes, there's some government shutdown peace now supposedly happening in the Middle East, but Putin and like you said, there's nothing that stops and America and the EU is all growling at each other all the time with the government shutdown. I just think that there's, like you said, there's nothing that stops gold to going to 4,500. I mean, because there is no technicals that we can utilize except the FIP extensions and the FIP retracements to try and guide us to where it could possibly go. But I mean, for now, we're sitting way above. I don't, you know, I mean, I've been thinking gold's going to come down since like the 3,600, 3,700, 3,800 levels. Now, I mean, we're sitting way above that, and I mean, every time it just whenever you think there's going to be some kind of retracement, it just keeps on going up because the fundamentals are currently supporting that
high price.
Yeah, that's it. So that's just my feeling and my 2 cents worth from just sitting on the outside and looking at this and thinking, you know, yeah, I mean, I need the retracement because I've got a hedge right at the bottom that I need to strip and all that type of stuff. But you know, yeah, I at the same time I need to be hedged at the top as well to make sure that, you know, I at least make a couple of bob, or at least make what I'm losing with a hedge at the bottom type of thing. So,
but Tola, what I said earlier on is exactly what you're saying. It's a paradigm shift. You've got to shift your paradigm, okay, with what's happening in the market. Because people are saying, oh, a retracement has got to come, retracement. Yes, it will come. But we've moved on to a whole new paradigm now. We've moved. So you've got to adapt. You've got to adapt. We've moved. We can't be sitting back here in the same paradigm that we were at 2,600, you know what I'm saying? It's moved. So when the retracement does come, it has to come within the new paradigm. You know, so retracement might come and it only moves to 4,000 or 3,800 or whatever. You know, and then it pushes back to 5,000, you know, so that's what I'm trying to get through to the community this morning, is that there has to be a shift. It must come down, like you said, no, exactly that, it must come down. Surely it can't sustain. It can sustain, and it will sustain as long as the fundamentals back it. It will sustain this move.
You see, the other thing, and this is just again purely, I would think, fundamental, is that you know, the China, all the other banks, all the countries accumulating gold, and the BRICS, the whole BRICS thing. And I know that, I mean, the dollar is a huge asset, and America will defend it with everything they've got. But I mean, you know, maybe our new bottom for gold is 4,000. Maybe
it's a new paradigm.
Exactly, because we're moving in uncharted territory at the moment, and I just get the feeling that you know, if we see below 4,000 again, we'll be lucky.
There's 2 dojis spinning tops on the H4. The volume's dead. I think that the price is going to retrace back to the 8 and probably the 21.
That's what happened yesterday.
Yeah.
With the 2 dojis.
Yeah.
And then it just pushed right up.
Yeah. So we'll see. We'll see what happens. But I think the price is going to drop now.
So what I'm looking for is additional price structure to form.
That's what happened. That's what happened yesterday with the 2 dojis.
Okay, so that
and then it just pushed right up again.
For something to work off, a foundation to work off. You know what I'm saying?
So what I'm looking for is I'm looking for additional price structure to form. Okay, I want more structure to form. Okay, so that we've got something to aim for, something to work off, a foundation to work off. You know what I'm saying? You got no structure when it's doing this. So I want price to come down and create structure.
Cool, Oaks. Enjoy your day.
And that's what I'm waiting.
This is recorded.
I thought it started doing it yesterday and then straight back up in Asia again.
Braden, how's it? You got something to say?
Always. Thanks, Tola.
Hello. Can I ask a question quickly? Well, it's a question, you know. Being an amateur trader and like first time and whatnot, I've done as indicated, as taught by you, I guess, or I'm doing as taught by you, and learning the signals and stuff. You always say don't trade on speculative ideas, etc. Trade on what you see. And I placed one or two cells, well, a few cells manually while the bot was doing a marvelous job at the beginning, like 2 months ago, at the 3,400, 3,500 mark. And then it just kept on going north, okay? And I stopped trading south, putting in sale orders manually. But I found myself now almost at like 30% drawdown. My bot is off and everything, but I'm at about 35% drawdown at the moment, just because it's going north, and I haven't hedged myself because surely it's going to come back down again, you know. What do you recommend to someone that's now the bot is off? Because even if I turn it right on now, it's going to put an hedge in right at the top.
You gotta just,
I don't want that.
before we answer,
before
Alan answers
how do I get my drawdown back down again?
Let's take a step back and let me ask you a very
honest if I can just step in here,
in a bullish market like
Braden,
this,
is that
give me one reason
you gotta
why
just
you had a manual
before Alan answers your question, is let's take a step back and let me ask you a very honest question. Okay. In a
No, I
bullish
don't agree
market
with you
like
that
this,
it's inexperience.
give me one reason
You've
why
been with me
you had a manual
for
sell.
2 years, 3 years. Can't blame inexperience now.
Okay, that's an honest answer.
Inexperience and greed. Okay. And my sales are 0.03.
So,
Okay, let me say it this way. I had some sales, and I guess you could say I was scalping a little bit, just taking small trades. And my sales are 0.03. Okay, so they're very small, in my opinion, non-greedy sales. Okay, it's not like I was putting in big sales, and I've only got $2,500 in my account. So it's not like I'm not in the same league as what you guys are. But I put in small little, and those small little 0.03 trades.
Psychology behind
$200 loss each so far.
About this morning in terms of paradigm shift, it has to come down. It has to come down. Look how far it's moved.
I
Really?
kind of
Does
was
it?
speculative.
Does it? You see,
can you see the psychology behind
Yeah.
what we're talking about this morning in terms of paradigm shift? It has to come down. It has to come down. Look how far it's moved. Really? Does it? Does it? You see, and that. Yeah.
My concern. I'm a religious person. Okay. So I read the Bible, etc. And the Bible talks about the final days. There'll be wars. There'll be rumors of wars. There'll be all those funky things. Okay. Which to me, and it seems to be, and there's a lot of talk about it being the final days. Okay. So looking at what happened last year or 2 years ago or 3 years ago on the markets at the moment, it's becoming not that accurate, purely because if it's the final days, people are going to be buying more gold and trusting fiat less. And so my concern is that it really is the final days, and we're never going to see 4,000 again.
Based on that comment, you need to hedge sales immediately. Okay, and then flipping regather.
Well, you've answered your question indirectly.
You know that, to start stripping those hedges.
That
I
means,
agree
based
with
on
you.
that comment, you need to hedge your
It's a
sales
sound
immediately.
strategy. It's not trading advice.
And then
if this was my account and I was in your
and then
position,
work on a strategy to start.
This would be my
stripping
strategy
those
and my
hedges.
thinking.
That would.
All fundamentals are pointing north. Everything is pointing north. A 4,200 wall is an opinion. It's speculative. A retrace back down to a lower level, opinion, speculative. But what we do know, fundamentally, the price is going to 4,500. Guy?
Yeah, there's no sign saying that.
That's going to stop, 100%. There's no sign saying that. I'm just concerned, and I have an obligation to my investors. People that are using the robot
there's
that
no
are
sign saying
new
that
and
it's going to
don't
stop.
really understand and are looking for guidance. Now is the time to be risk off. It does not matter, okay, what we think and what we feel. The point is we're at an all-time high You need to respect that. The banks can do anything. They're known to do anything. I want to go back to your religious comment. I didn't quite grasp it. Okay, what did you say?
Okay. Yeah, I'm going. Okay, well, I'm going to make two comments just quickly. One, I'm going to take.
I don't give advice.
I think I've asked the question that a lot of people possibly on this group have maybe just thought but not asked. Okay, about how I've done and I've made a mistake, and I acknowledge I've made a mistake against your advice. And so there's no, well, you know what I mean. Okay, there's no pointing fingers here. I'm taking full responsibility, but I'm asking you guys as professionals who I should have listened to 100% how to get this idiot me out of the bit of a bad pickle at the moment, you know. So I'm going to take that question further onto Discord later on, just for a bit more advice. But you know, from a religious point of view, just getting back to your second question, from a spiritual, I mean, and I believe in God, I believe in Christ. I'm a Christian. Okay, so and at some point there's going to be a second coming, per se, according to religion. And they say before that happens, there's going to be serious wars, rumors of wars. People are going to be doing things that are really, really bad.
Carry on.
And that'll be just before Christ comes again.
Sorry. Mute a sec.
And so anyway, and if that is the case, if there's serious wars and all the stuff in Palestine or wherever is going on in the world at the moment, Ukraine, Russia, may never recover, which will then mean people are starting to fight about minerals, about water, about food, about things like that. And they're going to forget about fiat. And so they will be investing in gold. And gold, who knows what the limit will be if the world is really coming to an end, or if it's getting close to that, which most Christians do believe is happening at the moment. It just makes what you guys do, and you, Alan, especially having responsibility. I mean, we all went into this with our eyes wide open, so we can't hold you accountable, and I'm not doing that in the least. But it makes it impossible for us newbies to learn. You know what I mean? Because I did try, and I am still trying to learn the techniques that you learn. The only thing that stands true is the ATMA. You know, nothing else counts other than the ATMA in my mind, which is a simple philosophy. But it's impossible for me to learn trading. You talk about all these Fibonacci and I don't know, all these other things that you guys were mentioning as professionals. But it means nothing to me because we're in a new, as you said, we're in a new paradigm now. You know, we can't learn because there's no data to learn from. So me as a newbie in a position of Impulsive, I've got myself into a little bit of trouble down at 3,400, 3,500. How the hell do I get out? If I hedge now, sure, but my bot is going to be hedged.
Martin.
If because you use the stripper on the bot, because your call, I have to manually trade and take some of the profits of my gains and
Martin,
strip from
just hold on, Brayden.
Strip from the lot.
Martin.
Numbers, let the robot trade
I
with
need
your
to know
remaining
how
equity
to trade if I'm going to
and
trade
use
manually
that
and
profit
strip
that
from
it makes to strip
strip
your
from the
hedge,
lot.
chip away at it.
That's what you would do, Martin.
That's what I would do. And I think now,
4 new charts, new magic numbers, let the robot trade with your remaining
ago,
equity
and
and use that profit that it makes to strip your hedge, chip away at it. And
gold's going up.
that's what I would do. And I think now,
going to go down. And then it's
like I wish you'd come to us with this a few weeks ago. It was prime time now to get that thing stripped. But I still think we're in a good position. Gold's going up, and like Guy and Alan have both said, it's probably going to go down, and then it's going to go back up again. So right now you'll have to trade
Obviously,
extremely
funding,
small lot
I would
sizes.
try and fund.
Be patient.
Yeah.
But the moment's
And
coming
then-
when you can increase your
and this
risk
is
a little
bitter,
bit
bitter pill
and
to
scoop
swallow.
profits
But
to get rid of your
everyone who's
hedge
done
and
it
get
has
things
said
back
best
to normal.
decision they've ever made.
Um,
The guys who've taken the
obviously
knock and closed
funding,
out
like
either
I would
their
try
hedge
and fund.
completely or closed out half of their hedge in a loss.
And
and
then,
carried on trading
and this
made
is
it
a
back to
bitter,
space.
bitter pill to swallow.
So there's
But
like a
everyone
few-
who's done
few
it
things
has
you
said
can do
best
in
decision they've ever
combination.
made. Is the guys who've taken the knock and
just
closed
make
out
your own
either their hedge
easier.
completely or closed out half of their hedge in a loss and carried on trading and made it back in spades. So there's like a few things you can do in combination, and just make your own life easier.
Let's chat about that on the Discord group because I'm happy to take a loss. I'm seeing myself in a learning
Put your
curve
hands
over
up.
here.
Put your hands
I
up if
don't
you
think
hedged.
I have
Put your
to
hands
make
up if you
profit
hedged
if I fall.
and
Second time round,
you
okay.
have a hedge,
So I'm
or if you
happy
have a
with
hedge,
that,
put
but
your
I
hands
just
up,
wanted
or
to make
just
the
put
best
thumbs up.
possible decisions
Tola,
available
who else?
at the
Braden,
moment,
we
you
know.
and it will be my
Okay, cool. So I also placed, my robot also hedged. There's a hedge trade, okay, that the robot placed. So it wasn't a manual issue, it was the robot did it. And mine is placed at 3,060. So why haven't I closed it? Why haven't I stripped? So I think that the price is going to retrace. I'm waiting for a deep retrace. And also I'm like everybody else, I'm greedy. I don't want to use my new profits or my existing profits that have been banked to strip away. The correct thing to do for me would be to start using new profits generated to start stripping away. But I want to wait until the price is lower for me to do that. So I'm happy in the position that I'm in. I'm in a different position because I've got a blue bar, not a red bar at the top here, which profit. So if I was in a situation where I had a hedge or I was net short, more short trades than longs, I would definitely hedge, even if I'm hedging at the top. So if I was in a situation now where if it went any higher, I'd be in trouble. It doesn't matter because the chances of me blowing my account now become real. So to protect the account, I'd rather hedge at the top, and then if it comes down, if the price comes down, unfortunately I've got a hedge at the top and I'll have to strip it. But at least my account is safe. I can start new charts, I can generate profits, and I can start stripping away at my short down here and at my long trade at the top.
Al, you gotta look at both sides of the apple. You can't just. So what you said there is the fear of hedging at the top. That's eating one side of the apple. The other side of the apple is hedging here. His price goes to 4,500,
and you got a beautiful blue trade.
Al, you gotta look at both sides.
I always
of the
like
apple.
to
You
look
can't
at it
just,
from a
so what you
negative
said there is
perspective
the fear
of what the risk is. So I need to now be mitigating the risk, not speculating that my hedge is going to go into profit. If it goes into profit, bonus.
You look back and thank God.
The main point is protection of the account and saving $2,000 or whatever your account size is. Some of you have got much larger accounts in the $20,000 zone, $30,000, $40,000 zone. You need to be risk off, protecting capital, and having a strategy. Like some of you don't have capital to fund your account, so then you've got two choices. You can not hedge, blow your account, or you can hedge, protect your capital, step back for a week or two, get your psychology right, come and talk to us, understand the strategy of stripping using new profits, and then implement slowly to get confidence. And as your confidence increases, you become calmer and you can make more educated decisions. I hope that's helped you, Braden.
I can ask you. can I ask you? That certainly does, and it's something I was aware of beforehand, and I haven't just done. But yes,
You see, you're speculating again. Okay, you speculate. If it goes further north,
was five losses. Okay, for argument's sake, I'm just throwing a figure out there, and that would edge me 100%. But it's being so close to the top. I'm hoping it comes down, so that obviously my loss.
Hope.
No, hear me out. But I agree with you. I agree with you that I am. But just hear me out, if you don't mind. I agree with you. So what if I put in a lot of 3, for argument's sake, and I'm like 50% or 60% or maybe even 80% edge, so that if it comes down, it's going to still marginally bring my drawdown
yes,
down.
you can. It is an option.
On my boss,
The challenge the point I'm trying to make is that you need to catch it before your margin percentage gets below 1,000%, because that's when it really becomes scary for a person and one goes into panic mode.
My margin is still 1,900%. That's what I'm not 100% sure about. Almost 2,000 margin percentage. I'll send you a screenshot. But my margin is still 1,900%.
You're not in trouble. You're only in trouble when you make mistakes and you leave it, and then your margin drops and you can't hedge, or you start panicking. You need to keep a clear head, and you need to follow a strategy. You need to have rules. So you keep breaking your rules. So you have a rule, you know what the rules are, and then you break the rule. It goes against you, messes with your psychology. Then you calm down a bit. You say, okay, or before you calm down, you say, I'm never breaking the rules again. I'm going to follow the strategy. Then you get a bit more confident. You break the rule again. And so I see this all the time. And so it gets into a situation, then you blow your account. You've got to write your rules down and say, these are the rules. And every time you want to place a trade, you need to have a checklist. Okay? Does it match my trading criteria? If it doesn't, it's all speculation and emotion. People blow their accounts because of poor wallet management and poor psychology, which is your trading rules and your money rules. Okay, cool. Thanks, Guy. Cheers, bud.
Hasn't got the bot running at the moment, so his account can't hedge automatically. So like there's 2 choices now. Is to say, well, I can
manually hedge.
All right.
So Braden hasn't got the bot running at the moment, so his account can't hedge automatically. So like there's 2 choices now. Is to say, well, and the knot would have been smaller. I can follow thinking and hoping prices will drop and get yourself deeper and deeper into trouble. I'm just thinking like you can take a little bit of a knock now to be hedged, and even if be angry with yourself in 2 months because the price has dropped and the knock would have been smaller, or you can keep thinking and hoping prices will drop and get yourself deeper and deeper into trouble. Like right now, your account it needs to be hedged, even if it's partially hedged. You let your drawdown get more difficult. Like right now, there's nothing protecting the capital. If gold, for whatever reason, spikes today, your drawdown is just going to get bigger and bigger and bigger. And at some point, should not be taken seriously. Like right now, your account is very savable. At some point, the higher you let your drawdown get, the more difficult it gets to save that account.
Cool.
That's my opinion.
And I've been living in hope. Agreed. Okay, you got it.
So that's my extremely uneducated opinion.
Guys, have a great day. Have a good trading day. I've got another meeting.
Ever.
You guys can stay on and discuss, but I've got to go, so I'm leaving the meeting.
Thanks,
and I'll chat you guys on Discord.
Thank you very much.
Good to see you all. Cheers.
And I hope my question is actually, I'll ask the question that other people may have wanted to ask. So thank you.
I've got to run as well. Good to see you all. Cheers.